So what we're going to look at today is the changes that is taking place for businesses. Um, if you look at the background to these changes, as I mentioned earlier on, COVID is leading most of what we used to do face to face to off face to face in terms of digital. And if you look at our lives as well, our banks are changing, moving to digitalization across the board. The money transactions are moving to electronic. The checkouts in the supermarkets have changed. The data storage that we used to have in our own vicinity, our own control, is moving to the cloud, and apps are coming all over the place for us. So today, let's look at the company's house reform. I'll need to share my screen. Are you all hearing me? Yep.
Yeah.
Good. Please, if you do not hear me or you do not, so I'll share my screen, and if you are seeing the screen, are you seeing the screen?
Mhm. Yes, we are.
All right, okay. So let's be interactive though. I mean, if we want about interactiveness means as I go along, we you have something, we'll have a point where we can ask questions, and also we can pop in questions at any time as well. So this workshop is coming as part of the British African Business Network, of which I'm a member of, and I've been blessed as well to be a member of this business, and we all happen to have an interest in the, and some of us have interest back home, but we all know when we have that connection with the United Kingdom, uh, it enforces us to be a little bit more organized, a little bit more aware of the impact of our businesses in terms of how we support the economy that we live on. So this is really looking at the regulatory reforms that have come upon us, and we cannot continue to be blind to this fact and continue to do things the way we used to do. So I have slides here up to 19, but hopefully we'll get through them. And if there is any time you want to pop in questions, let me know. All right. Any questions so far? No. All right. So it will be good you mute, and when you want to say something, yes, you unmute so that I do not feel you're trying to say something. All right. All right. So we hopefully will look at the main issue that has brought about this recent activity that is buzzword around. We know just last week or so, or this week, we have a new budget as well. We haven't looked into that. Hopefully we'll have a session on that to see how we go on with this, what comes out of this budget. But today we will look at the Companies House reform, and then we'll look at the HMRC reforms as well. And then we can review some of the aspects for landlords from experience or from available information, and then we'll talk about paying HMRC taxes. So we will hopefully all come from this with something that we can take on. Now, if you have a limited companies are the most common business entities that we have in the UK. But we also, the oldest is self-employed or sole trader. Sometimes they say sole trader, but they say self-employed as well. Means you are not just a limited company, but you're trading under your own name. Although the self-employed term is also widely used to cover those who are running their own business. You know, like me, I'm running my business. So I would say I'm self-employed, but I'm running my business under my limited company. So I'm a limited company director, but the self-employed term is referring to those who are running business on their name. They could also be landlords as well. All right, so let's look at the background behind all this. As I mentioned, COVID is one where digitalization started taking place rapidly. Where um, so HMRC and companies have jumped in on the bandwagon, and it's coming up from the act. You don't need to know about the act, but it's good to know about the background behind what is happening. It's called the Economic Crime Transparent and Enforcement um, Act of 2023. It was introduced in light of Russia's invasion of Ukraine, and the realization that UK has now become a place where people are using these companies for criminal activities, money laundering, extortions, and a lot of other things were happening, and people were using companies as money laundering vehicle, and they also want to really clamp on businesses that are owned by some of the rich Russians, and when they want to apply the sanctions, they want to be able to know who and who actually owns the company. So they are coming up to prevent organized criminals from using these companies and abuse the UK that has an open economy. Before, it's very easy to open a company, and we'll look at how the fees have also changed. You can just decide to open a company, and you can easily open a company without much question being asked about who you are. They do ask about what you want to open the company for, but they do not enforce some of these things. All right. Also, these acts come about to strengthen the UK response to this economic crime. Now, there is also another aspect that came in strongly that is coming up. It's the cryptocurrency, crypto asset, dealing with online money per se, not the basic brick and mortar kind of money, but these are money that exists online, and the cryptocurrency, you must have heard about them. And then the issue of data being hacked, data being hijacked. So they want to strengthen UK's response to these crimes so that when they happen, they can easily get to know who is behind it. And most of these people involved in this were hiding behind companies. Now, they want to give better service delivery at Companies House with reliable data. Companies House has just been a register where everybody say present. I'm here, I'm present, and where's your account? Yes, my account, but nothing happened with it. So Companies House want to do better than that. They want to better off what they do. We know HMRC do scrutinize, but again, Companies House never used to scrutinize what account you file to them. So people are just plugging figures and send it to Companies House, and they will accept it as a filing. So this has resulted in a long list of significant changes with Companies House compliance that we are now talking about today. So it brought about changes to the Companies House register, and to those of us interacting with Companies House, we have to be able to be aware of these things. Uh, so let's look at some of the objectives of these reforms. It's all for good. One, we have to ensure that any person who is required to deliver a document does so. Now, onus is on the directors of the company to make sure that the company deliver a document. But then when you have a company directors who are at large or who are not known, some of them are not alive, some of them incommunicado. So there are quite a number of companies that are not delivering the document that they're supposed to do. So that is why this reforms is taking place, one of the objectives. The other is to ensure that information in the register is accurate and complete. Again, I just mentioned that they do not used to in the past check these documents that are given to them. They just accept them. But the technology has moved on now. They are able to check them, whether it's artificial intelligence, whether it's um, fast processing computers, or whether it's unlimited data storage that is taking place now. They are now moving on to start some accuracy and completeness check. Thirdly, is to ensure that the records do not create a false or misleading impression to the public. Um, when we file this account, most people that want to buy a share in our business or want to be a partner with us will go to company's house and see the available information there. So they want to ensure that we do not create a false or misleading impression to the public. So these are all going to lead to prevent companies from unlawful activities. So we are now in a position where a lot more information is going to be available with companies house about whoever owns a company. If you do not own a company, you still need to adhere and listen to what is happening here, because within matter of time, you will want to open a company yourself. Let's look at these reforms and changes a little bit. I don't know if you all can see the screen. Yeah.
Yes.
All right. Good. Good. Now let's start with the what are the changes that are needed. One, we now need to add a statement when we are forming a new company and when we're filing confirmation statement. It may seem just like a vague statement which is stating the obvious. It says we're now going to say the subscriber wish to form a company for lawful purposes. Before, this was not there, so they were losing cases in court where,
Sorry,
yeah.
Alhassan. I'm not quite sure whether you want us to see the slides, because we can't see the slides. We can just see the screen with the topic, but we can't see the actual slides. Did you want us to see the slides, or you
Yes,
just
the
talk
slides. I
about
want you
them?
to see the slides. Are you not
Yeah,
seeing
they're
this?
not that we can't see, so they're not coming up. It's just the screen, the topic that we can see. I don't know whether anybody else can see.
Yeah, I mean,
No, he hasn't started on the next slide.
Okay, you haven't, right? Okay.
all right. Let's see. What are you seeing now?
We
I
can
mean, let
see
me see.
entrepreneurs workshop.
Oh, really? Okay, you are meant to be
Yes,
seeing the slides. I've been moving on
yes,
slides.
thank
All
you.
right. Let me just see. Um.
You might want to come out of it and then come back in.
Yes, let me do that. Let me do that. Sorry, I mean, I actually thought you were seeing the slides.
You need to start the slideshow.
Screens. CSR. Share. Are you seeing any slide now?
Yes,
Yeah, that's better. Yeah.
All right. Okay. Now, this was the content that move on after the previous slide. So you are just seeing this slide, yeah? As the
Yes.
slide change.
Yeah, we're seeing this now. You can change it to the next one. Next slide.
All right. The next one is this.
Yes.
You
Okay,
see
it's
the next
working
one,
now.
yeah?
Yes, it's
All right.
working.
Okay. Sorry. Okay. So I was talking about the ECCTA. That is the Economic Crime and Transparency and Enforcement Act, and I've just explained that. But this is the slide relating to that. And we then talk about the objectives of the reform. One we say is to ensure, I won't go through them again, but are you seeing the four objectives of the reform? Yeah?
yes,
Yes.
Good. Now, so we are looking at the reforms themselves. So it's good you mentioned that you are not seeing. Are you seeing the changes?
Yes, yes.
Yeah.
All right. Okay, good. If you're seeing the changes, that's good. Um, and just want to be sure that you all see the text as well. Are you seeing the text?
Maybe
Yes.
if you do it on slideshow, is it on slideshow? Because I can see
Yeah,
two slides.
it's on slideshow. Let me just see. It's on slideshow.
You need to put it on full screen.
Full screen, yeah.
More slideshow options. Screen. Uh, no, it's not better, is it? Let me just see. All right, slideshow. Let me go again. Let me share again.
Can I ask a
Yep.
question? When you said with the company's house, now you can't just file accounts. Does that mean all companies now have to have audited accounts? Because I know we've always put in unaudited accounts for small companies.
The term audited account, no, it's still not a requirement for all companies. Only certain companies that meet certain income or size criteria that are required to file audited account, independently audited account. The filing criteria for company remains the same. It doesn't have to be audit. All right. And who is
Yeah.
that anyway? Is
Richardson.
Richardson?
Just
Yes.
Ajay.
Yeah.
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 Can
Yeah.
you
No
click
problem.
now on the where is it now? From current slide, so it's probably bigger.
Yeah. Yeah. From current slide, that's where I am anyway. I'm just trying to see, you know, why it's not bigger on your screen. Is it still the same?
It's better. I think you can start talking through them just so that we don't lose
Yeah.
any more
All right.
time.
Okay.
Yeah.
All right, okay, right. Let's talk about the changes that are taking place. One, we need to make a statement. This statement is meant to make sure that if we are in court and we are held for a company acting unlawful, then they will take us back to this statement that we are forming this company for lawful purpose, not for human trafficking, not for this, not for money laundering. So that's one thing that is applied. And then the next one that is coming over the changes is that proposed officers of a company must confirm their identity, and that is currently going on. They must confirm that their individual identity has been verified. All right, so it's not just identity but verification of who you are. The next changes that is taking place is that it applies to all new companies and existing company, and for people with significant control, PSCs. Again, that was introduced very early on, and then the essence of it is now coming to fruition. It says they need to also verify if you have someone who is the person with significant control, even if they are not director, they need to verify who they are. Are you asking question, Mr. Ajayi?
Yes, another very quick one. Does that mean we no longer are allowed to use nominee directors? Because you set up your company, have nominee directors, and you are the UBO, or you are behind the scenes. Has that
Yes,
changed?
that is going to change. Those nominee directors are not, if they are not corporate directors, they are literally putting themselves in place, in your place. They are not just going to be nominee directors that have no bearing. So it's not going to apply anymore.
Thank you very
But
much.
I will get back to you on that. Nominee directors. All right. Now, another thing is the Companies House have the power to remove or decline information that you've already submitted. When you submit account, literally nobody asks questions. They just tick the box that you've. But now they could remove or decline to your information already submitted, and then we see that has been happening a lot as they get more digitalized. They are doing this frequently to say your document does not meet the standard that it's meant to. We have different standard of accounts that they want, and then they will be checking on them now. Now, for if you are aware, compliance fees have already increased. An example, like forming a company before was like £10, now it's like £50 payable to Companies House. So if you're going through an agent to form a company, or if you're going through your accountant, yes, obviously forming a company now is more than just paying the Companies House fee. The fees have increased. Confirmation statement as well, when you file it, it's mainly online. The fees have increased from £13 to now it's at £34. They have a whole range of fees. I cannot mention them all here that have increased. If you have question in any area of Companies House fees, they've increased anyway. So the agents or the accountants will definitely also increase to get the admin fees from that. Right. Another thing which is was there before is that you can make an application for your address to not be disclosed with the public register. That application to not disclose your address in the public register has been removed. So you now need to get a proper registered office. They no longer use PO boxes. But you have to get an address that is the post can reach to in the UK. This has in place from March 2024. So they are cleaning up. They are cleaning up as you get to your turn. They will definitely tell you about this. And another thing that have changes is the personal and unique email addresses are required now for all companies. You have to provide a email, you have to provide email address, and that email address will be checked by sending email to it, and then it gets, so you cannot end up having a wrong email address. So the process is complete only after they've checked the email address. That's been going on as well from March. Now, there are also a lot of new rules for those that have limited liability partnerships or those that are appointing corporate directors. In other words, like Mr. Ajayi was saying there about nominee directors, I think that is for sure not in place. Yes, Mr. Ajayi, question?
So another very quick question. So you were talking about emails, and a lot of banks now want you to have email address and you register a domain. So don't use Google or Hotmail or iCloud. Is that the case with the Companies House as well?
No, I mean, which banks want you to register a domain email address? Most banks and Companies House accept emails from Gmail, Yahoo, Hotmail.
Thank you.
Yeah. So I mean, no one will force everybody to get domain email address. Like at alaccountingsolutions.com. No, no. An email address that will be checked. And when we come to verify, you will see that the email address, what I'm talking about here is the company should have its email address. It could be your email address. I know people will have they open a company, they use their personal email address. What I will advise is that when you open a company, open an email address in a Gmail or somewhere so that it separates your personal and your company. All right. Now, so the name of a company also has been in place for a while now. But again, now with the digitalization, they can be checked very fast and checked very prompt. So I mean, like someone came to me to open a company called United Car Company Bristol or United Car. They disagree with it because there is already a big company called United Car Company. So these are some of the names that they will not allow you to use. And also there are times when if you use a name that show dominance over, like nursing, or you using something like breeches. I know we are called breeches African, but anyway, these names are really protected. You can come and open a company that use a term that is associated with the public services, so they are protecting them more stringently. And then the late filing penalties also there's going to be changes on confirmation statement. We know that late filing had always been associated with the account. Confirmation statements were associated with threats to strike off your company, compulsory strike off, but now they are going to put a penalty on that, and that is very stringent, but they haven't confirmed this yet. It's still in consultation about penalties and that. Now I've changed the slide to Companies House reforms, ACSPs. Are you all seeing the screen? All right. Now, what are ACSPs? These are agents called authorized corporate service providers. From March 2025, these are companies, these are registered entities that can help authorize or verify directors. So for us at AL Accounting Solutions, we registered very early on to be an ACSP. So these are people that can deal with Companies House. Not just anybody can deal with them on your behalf, or you deal with them directly. Now, these ACSPs can carry out this identity verification for directors and for the persons of significant control in the companies. And in spring 2026, filing account or submitting confirmation statement, if you do not do it yourself, will only be done by those ACSPs. So these ACSPs are going currently they can do your verification for you, but in the future in 2026 they are going to be the ones authorized to file the account with Companies House on your behalf. Now, this identity record will be kept for up to 7 years. So if there is a dispute about you using an ACSP, they need to keep those records for up to 7 years.
Sorry.
All right.
Sorry,
Now,
Alhassan.
yeah.
So I just wanted to ask about the ASCP. So does it mean we stop filing accounts ourselves or the confirmation statements from next year? Can we still file for ourselves? Because sometimes you don't really want to use an agent because you want to save costs. They all charge money. So are we now not able to file accounts, confirmation statements from next?
No, I'm not saying that.
Okay.
I'm saying is the ACSPs can now help you verify yourself as a director, and they are authorized in the future filing account on somebody else's behalf. You have to be an ACSP or you do it yourself. So that requirement or that need to do things yourself is always there. They are not forcing everybody to go to an accountant. Most times people go to accountant to do it, but if your accountant is not registered as ACSP, which is a question that you need to ask your accountant, they will not be able to file the confirmation statement for you, neither submit account from 2026. All right, but you can do it yourself so long as you have the right tool and the right mechanism. We'll come to filing confirmation statements soon. Yeah. Right. All right, now let's talk about this identity verification. That's the hot topic right now. If you have a company, I just want to ask here, if anybody here have not verified themselves, please make sure you do it right away. We'll look at the who is required. All new and existing directors. If you are a director existing, or you're going to be a new director, you have to verify yourself. Now, verifying yourself, even if you plan to open a company in April 2026, you can still verify yourself now. It's just like a check process. You don't even have to be a director to verify yourself. But once you verify yourself, you then will be issued a personal code. So all new and existing directors, if you are members of an limited liability partnership, if you are a person of significant control in the company, or if you are any one of those that are delivering documents, such as the ASCPs, or someone in the company that want to deliver document, please make sure you go and verify yourself with company's house. You'll be issued a personal code. We'll come to that. And what you need to verify yourself, it's when you are incorporating any company from today. In fact, it was from 18 November that you are required to have all the directors in that new company to have been verified and to have been issued a personal code. Now, if you're filing confirmation statement now and since 18th November, going back to 18 November, you would be required for all those involved to add their personal code in the filing. It's like a reference number that is unique to you. Let's just say it's like your national insurance number, but this case it's coming from company's house, and we'll look at that. All right, so how do you verify yourself? You can do it yourself, or you use you go directly to company's house resources. We'll look at them, or you go through an ASCP. All right, it's ACSP, sorry, not ASCP, ACSP. All right, go to the next slide. Now, the identity verification itself, once you verified yourself, you receive, when it's complete, you receive an 11-digit character code that comes with a dash, 3 characters, dash, 4 characters, dash, another 4 characters. Have anybody here done that verification and received that to their email? Those who have companies here.
I did a few days ago.
Oh, good. And anybody else? Or is anybody else here that need to do it that haven't done it yet? All right.
I need to do a few. I received an email for one of my companies to do the verification, and they stated a time bracket, because I tried to do it and they said, no, you can't do it now. I think that was before the 18th of November.
All right, okay.
But they didn't say that do it from 18th. They just said you have between 18th and I think 30th or something to do it. I can't remember.
Okay, it's open now.
Why is that?
Open now. You need to go in again and try to do it. Let's just look. There is an app called ID Check. If you're using your phone, there is an app called ID Check that you need to have on your phone when you are doing it. And if you are using an ACSP, I keep saying ASCP, but anyway, ACSP, you will be able to complete the process with them once you've done the ID check. And then there is another app called gov.uk1. So these are 2 apps that you will need on your phone to complete the process. If you do it yourself, go and make sure you get those 2 applications on your phone. Now, there are couple of options for you to do this verification. One, once you've done the ID check app on your phone, you do it will check your phone features and verify that it is you, and then it will give you an email with the documents to give to your.
Sorry, son. Hello.
Yeah, go ahead, Lan.
Yeah, now that you're deciding it, I did it for one company, and it was such a tedious process trying to, get the phone to pick the face and all this. It was such a long process. Was that the same thing?
All right, that's what you're trying to do, Mr. Stanley, is like doing it yourself. You have to go through the ID check. Did you have the ID app? Thing is, once you've done it for one company, it have quite a lot. Mr. Ajay, Mr. Ajay, we have a lot of people adding people they know. Someone can add their aunt, someone can add their uncle as a director in the company just to fulfill the requirement without even the uncle being aware. Now all this is going to stop. People we've seen women adding their husbands, and their husbands are not aware that they are directors. But now all this is going to stop. That's one thing that this will help. Your personal code will be needed by every company that calls you and tell you, I need the personal code because you are in there. So yes, it's that personal code is yours. Now going through these options again, the option one is where you do the check for yourself and then send that email that Efru mentioned to your ACSP, who can then complete the process. If you find the process tedious, that's one option you have. Do the face check. This is mainly good if you are in Canada or you are in Nigeria, you are in somewhere you cannot do everything. You can try to do the face check app and then get that email and send it to your authorized corporate service provider. Now another option exists where you can send your original photo ID, like your passport. You have to send that one physically to your whoever is doing it for you, your ACSP, and then you can then send photocopies of your photo ID and some other document. They have a list of documents that you can send. That can take the burden off you. We are doing that presently for some of the directors here. They send to us their passport. And then they send to us all copies of their bills that we ask them for, and we charge £65 for it for the one director. If there are multiple directors under the same company, we charge the other directors £35 so that the cost would be appreciable to the just take the khaki, please. Sorry. Yes. The other option is to do it yourself, like Efuru has done it, and I feel yes, if you go through the steps diligently, now to open a bank account is pretty much similar, and it's hard, but it's hard. That's where the world is going to. So these are the three options, and as I say, if you are finding it hard to do it, come to us, we can help you do it, but you will have to pay £65 for the first director and then £35 for all the subsequent directors in the company. All right. Now, this is also coming up that account filing is going to change, but that is expected to be by the end of 2026. Filing a breach or filleted account will eventually be removed. A breach of affiliated account is where only certain specific minimal detail is displayed in Companies House. If someone go to Companies House, open your account, they will only see that filleted part of your account. They will not see the full account. So what is going to happen now is all the small companies and micro entities will have to file full accounts, which include the profit and loss. It shows your income and expenses uh, with the rest of your account to Companies House. Um, Companies House are also going away from the form, and it has to be now mandatory filing by software, using a software. So you'll have to invest. There are a lot of software out there. If you still want to do it yourself, you don't want to use your accountant, you'll have to subscribe. There are some software, yes, you pay as you go, you pay as you use. You don't have to be paying monthly subscription. Now, the disclosure of this full account that Companies House receive is still under public consultation. They may not put the full account into the register because they are still grappling with the maybe if the public want it, they will have to apply to see the full account, but they will be now requiring the full account by the end of 2026. All right. Any questions so far on the Companies House reforms before we go on to the next one? What's the time now?
Let me, yes, we have a few more minutes. In relation to the directors, the nominal directors, what becomes the status, if you like, of the offshore companies? So it's very similar to what I think Dr. or Mr. Ajay asked. So most offshore companies use these nominal or nominee directors because they don't want the veil
Yes,
lifted.
that is not going to apply. But again, as I say, in the interest of time, we will come. I will be specific and bring that update to the association. Yeah, because with that wasn't mentioned at all in the reforms. We've trawled through the reforms, and what they are saying, every director, which includes that nominee director, has to be a person, a bona fide person that will take that in and be that director or that person with significant control. Then they will have to abide to the rules that are in place. All right. All right. Now let's look at the next part of the. Are you seeing the screen? Making tax digital for income tax self-assessment.
Yes, we can.
Oh no, okay. Forgive me if you cannot read it through, but I'll talk through some of it. Now, the MTD word is very popular these days. Now, this applies for self-employed individuals and landlords as well. There is significant changes coming for them. It will start on the 6th of April 2026. It's going to have three main components: digital record keeping, quarterly account submission, and year-end reporting. Year-end reporting is in place now. So what is going to be added in this regulation is digital record keeping, which I presume is already on, because having your bank account as well as your record keeping mechanism is digital anyway, but having your accountant receiving your bank statement is digital as well. So that's still the same per se. It's just the word digital has been added to it. But what's really new is that quarterly account submission is coming up. Those who are VAT registered here know already of a quarterly submission cycle. Now, we'll still continue to use the government gateway that we have. This is another gateway. It's completely different from that one we mentioned earlier about companies, that gov.uk one. It's the old one. It's called government gateway, which has 10 or 12 characters as a user ID and password. But there is consultations in place to move everything to that gov.uk one login system, which you log in with your email address and the password. Right, so there is concentration to harmonize HMRC that use this one, and then companies house using there. So in other words, this all the digital data they hold about your company are soon going to be in one place, which means things that you hide from A and from B are now going to be in the same room. Now, so you need to complete a digital tax return at the end of the year as we do normally, but again it's digital format. It has to be a software, not to be Atitoyin is laughing at the hiding the what you hide from between companies house and HMRC. They don't know before, but now they will be sharing in the same room. At the end of the year you make a final declaration where you state that your financial position is complete and correct. Now, if about those who have rental property that is jointly owned, every individual share of the rental income will be taken into account individually. So in other words, if you have an income from a rental property and you are self-employed and you meet the criteria, you will have to make these returns quarterly, these quarterly returns. If you have rental income and employment income, it will not affect you until your rental income reaches that criteria. We'll look at the criteria soon. But again, even if you are jointly on a rental property income, you have to look at this and see how it applies to you. Now, if you're self-employed like a taxi driver but also own a property, or you're a self-employed plumber and own a property, then you will have two returns to make every quarter. You make one for your taxi business, one for your landlord aspect. All right, so let's get this clear. If you're jointly owned property, you still into consideration to make it if you meet the criteria, even if you have employment. But your employment doesn't need to be filed quarterly. You only file the rental income. But if you are self-employed and own a property, yes, then you need to do two returns every quarter. All right. What are the other considerations that we have? The eventual aim of HMRC is to pre-populate your income over these 4 quarters, and then they have that information at hand so that people who used to truncate their income at the end of the 1 year cycle are now finding it hard to really squeeze your income out of your tax return. So these are one of the objectives, is mainly to see that income flow that you report every quarter, that it's gone on to the end of the year. There is no sign whatsoever that this will affect those who have companies, properties, rental income on property on company. There is no sign that this will affect them. And also, if you are running your business as a limited company, there is no sign that MTD of income tax assessment or will affect corporation tax at the moment for quarterly filing. So there is also no sign that you need to pay your tax on account. Yeah, so but it's possible that they will come to that easily once this is settled. That they will say, okay, you know what? Those who are employed are paying their taxes every month. Now that you are self-employed, you are a landlord or you're a taxi driver, you are making these submissions, you need to be paying on account. So at the end of the year, you will only have to pay the difference when you do the full calculation. But they are coming to that, but they are not there yet. But we can see that this move is really coming to that. All right, HMRC will start sending letter. I don't know if anybody here meets the criteria. They will start sending out letters to taxpayers who are going to be affected. We're going to talk quickly about those who are affected or not. I know we've gone a little bit over 5 o'clock, but yes, we started a bit late. Now, the penalty regime is going to soon start. It will go live soon. They will not. They will send what is called penalty point first, for if you do not file in your quarter that you're supposed to file. But very soon, these points will become actual monetary penalties. So watch that, and I know they will give time for people to get settled to it. But then, if you are called to file quarterly, you have to file quarterly. I mean, that's just it. There is no room to complain. All right, so it will start with the point, penalty point, and then it becomes a penalty value. All right, now I've just mentioned there that they will look at your income from your trade plus your rental, and if you meet the criteria, then you would be required to. All right.
I wanted to ask you to, if you can put your details in the WhatsApp group, because I have a few quite detailed questions. I
All right,
probably would
no
like to
problem, sir.
engage with you directly.
All
Thank you.
right. So, what do you have, Mr. Ajayi? Just to confirm, do you have a company or are you?
Yes, I have a company,
All right.
and then I also have rental income.
All right. We'll talk then. All right.
Yeah.
All right
Thank you.
then. Okay. Now, this threshold that I've been talking about that they assess us, if your threshold is greater than 50,000, let's say we are now filing 2024-25. If your threshold is greater than 50,000, you will be mandated to join from 6th of April 2026. So in other words, come April 2026, there's going to be a lot of bustle of activities to file these quarterly returns. If your turnover is greater than, let's say you have a self-employed plus a property, and they both add up over 50,000 income, not profit, income that you get from your rentals. I mean, if you average London rental is over 1,000, so that's 12,000. If you have driving Uber there, and Uber is creating 40,000, you are now in that threshold of 50,000. Not your profits though, it's your income. So you will be mandated to join from April. If it's less than 50,000 but greater than 30,000, so if it's more than 30,000, you will join in the next year, from 6th of April 2027, and then the threshold is going down, which means if you defy it as much as possible by 2028 April, you will have to join, because it's reducing to 20,000, and that's been it's literally everybody. Over another 9 million people or so will be eligible to join. So this turnover test that they are doing now is going to be based on what you are filing now, 2024-25, and then they will start writing you that you need to join. So you have about 900 extra taxpayers uh, that will be eligible to join in that 6th of April 2028. So let's watch out for this, watch out for the letters, and then you will see. So the reporting, let's just quickly run down that. The biggest change and impact will be a complete shift from annual reporting to quarterly reporting. Now, I don't know, as an accountant, we have to charge a little bit for filing this quarterly return, because we are also spending money. Every facet of the process is increasing their fees. If you have a software that you used to use for annual, they are going to hike up their fees. Taxpayers will have 1 month and 2 days from the end of the quarter to submit. So by, I think there is somewhere when the first quarter, it will be April, May, June, and by 7th of August it needs to be to have been submitted. So they give you 1 month, which is July. So, and then few more days in August. So it's just exactly what is happening with the VAT returns. You don't have to adjust your tax in this quarterly account. If you've submitted a quarter, um, you don't need to go back and say, oh, that quarter is wrong. You adjust it in the next quarter. All right, you are not going back to adjust them, like we do sometimes with accounts. We go back and adjust the account and say, yes, Mr. Ajayi, go ahead.
So we submit quarterly management accounts, or what are we submitting?
Well, you can call it management account because they are not tax computation accounts. They just show income minus expenses. I'll come to that. If that total is less than 90,000, it's just a figure, one lump sum income, one lump sum expenses. That's it. You submit. So yes, they are not tax purposes account. They are not computing the tax at the point of submission until the end of the year.
Most software like Xero can do this automatically. Is that compliant?
Yes, it's compliant. It's just your income. If you have a Xero you've invested in, yes, you put your income for those 3 months, and then it files that income value and the expenses value. There will not be any tax adjustment until the end of the year. That everything will then be combined. Yeah, so even if you make mistake in your filing, so it's better to just file and make the correction next month and subsequent filing, and then at the end of the year, by that time your accountant will put all the 4 figures you filed plus adjustment in that final filing by January 2027. Yeah, so you do not need to go back and revise the submission. Yeah, you just correct it. And also what HMRC will do is they accumulate your income and your expenses, and then they will see the pattern. They just want to build a pattern that comes from this. Yeah, Mr. Ajay? Or is that another answer yeah? All right, go ahead. Yeah, go ahead.
Sorry, that was a legacy hand.
All right, please put it down, sir. All right, okay.
Okay, Alhassan. So I'm due to file accounts at HMRC 31st of January, self-employed.
Yeah.
So would that still take place?
Yes, that takes place as normal.
So my year end is not changed; it's the same.
Yeah.
So what I need to do in the middle of the year, so April, I do a quarterly.
Well, wait for the specific invitation to do it, because it depends on the criteria, which we can have consultations, and I see what your criteria is. I will advise you, yes, be ready and let's prepare for it. That's what we're doing now, is to find out all those who are, whether or not they've received the letter, because sometimes these letters can be missed. So you will want to do a self-check yourself and get your accountant ready for it. All right. So because that first quarter of 30 June will be due by 7th of August 2026, and so on. Yeah. So you can elect through your software online to have calendar quarters instead. But I think the perfect one is when you maintain the quarters April, May, June, July, August, September, October, November, December, January, February, March. I know people used to have different years, but that year that run from April to March would be best for the self-employed person to do, and that's what we do with all our clients. We put them on that period. I hope I can't see the chat. If anybody is chatting, please, you will be checking that on me, please. Now, at the end of the 4th quarter, HMRC will then send you back a 4th quarter's account. They will accumulate it and send it to you, and that can then be used to file the final account. So there will be 4 quarters plus final account, so it's like 5 set of figures, but the fifth one is the annual filing, which happens separately, but now they have information of you over those 4 quarters, and they can easily compare and contrast. The room for hiding certain values or income is gone, because you have to meet those 5 returns. All right. Now, the good thing with this filing is, if everything is below 90,000, you can only submit 3 lines. 1, income. 2, total expenses and net profit on those 4 quarters. You don't have to break down the expenses, which is a lot of work that is involved. All right. Good. Any question before we go on to the further? All right. Okay, let's move on.
Sorry, I
Now,
have a question.
yeah.
You're just doing a profit and loss account or a balance sheet and all of that?
No. You just do, if now, if you are a big sole trader and have 100 properties, if you have 100 properties, you have to do a full breakdown of your expenses and your income and expenses. But if you are a small one, less than 90,000, you just put the total income, total expenses, and profits. Nothing, no balance sheet.
Another quick question. So if you have property that's owned by an offshore company and has been for many years, with this new requirement, how does that work?
Now, if the property is owned by an offshore company, so it's not owned by you. We're talking about landlords that have property on their name.
Okay.
Now, if your property is owned by a company, this does not apply to you.
Okay.
Right?
Thank you.
If your property is owned by a company or offshore company, it does not apply to you. All right? All right. Okay. Now,
so what I think what he's trying to say, so many offshore companies own UK properties registered at the land registry. So that would bring them into that bracket if they are renting those properties. Wouldn't that be the case? Because they qualify under HMRC rules as rented property in the UK, even though they're offshore companies. So incorporated offshore, but UK properties registered at land registry.
Thank you.
right.
Rented property.
All right. So the offshore companies are not UK company; they are based offshore.
So they have no tax liability.
They pay UK income tax. So all these offshore companies with properties in the UK that are rental properties pay UK property income tax.
And the owners or the property owners are resident in the UK.
They may not be resident in the UK. They may not be. Obviously, directors are offshore. So companies incorporated abroad, it could be Seychelles, it could be Isle of Man, it could be any of these places offshore. So they're not incorporated in the UK, but they own UK property.
All right. What
and liable
we'll
to
do
pay
is
UK property tax.
I'll do inquiries into that and get back to you.
Okay.
Because yes,
because I see where he's going. I know what.
Regulation did not cover them.
Somebody needs to mute their phone, please.
Yeah,
Somebody
the regulation did not cover or did not mention that. So we'll need to look at that. Now, for tax paying purposes, there is someone receiving the income. If that person receiving the income is a UK resident or domicile for tax purposes, yes, it depends what declaration they've been making for those income in their tax return. If they've been making them as rental income from these offshore companies, then they will be under the rule. It's not a foreign income, it's a UK income, and if they've been filing self-assessment tax returns in the UK, it depends on how they classify, because these offshore companies are treating it as a managing agent for the company. In other words, they are the one managing it, but eventually the income or the profit goes to the owner of the properties. And if those owner of the properties are based in the UK and they are submitting tax returns, and under the property income section, that's where they've been entering those income, then they will be under this regime. But let's look at it in more detail. All right. Okay, let's look at the reforms. Just 2 more slides and we will end. Considerable pressure on the landlords and tenants. Why we say that with all these changes, it's one of the most affected sectors is that of the property rental or property investment sector, right? We have um, interest rate fluctuations that have happened over all this turmoil that have been going on that we've mentioned here. Now there's a Renters Act that is coming from May 2026. It's pretty much going to make it a little bit more harder to get rid of certain tenants or make it easier to get rid of this tenant. It's going to introduce certain things as well that you will need to be aware of. We have people, landlords having difficult tenants to get rid of. We have estate agents that we see milking landlords as well in terms of taking the rewards but not the risk of this tenant. We've seen that. We have plethora of property advisors, experts that exist that if you are not careful, you will end up losing quite a lot because everything on this industry is not small. And now with all that, HMRC is going digital as well on the landlords. So we have a lot of things that is taking place. If you are a landlord, you have to be aware of them. One of them we already know of the disallowed interest payment that makes it unattractive to be a personal landlord in the UK from April 2021. I think we have that interest is disallowed. Instead, you are given a relief for finance costs, and that's based on certain criteria for you to get that, even that relief. They've removed tax incentive for short-term furnished holiday letting because there is massive short-term letting taking place now in the economy. Everybody's going for call it Airbnb kind of style of renting. People are renting spots here and there. So this before it used to be people just take a holiday break somewhere in Cornwall, rent a house there for a week or so or for a month. But now it's the norm. It's becoming too much. So they've removed those incentives that used to exist for them. Renting a room in your house, you have a relief of up to 7,500 for which is tax free, but above that you have to report that in your tax return. Also, people have the idea that I don't need to report my property income until when I start making profit. Oh, I bought this property, but I'm currently making a loss. I don't need to report it on my tax return. That's not true. You need to report property income as soon as you start receiving it. We have quite a lot of people coming 4 or 5 years down the line, and now that things are going digital, there is just a matter of time that you will get a letter that you are a landlord and you've not been making these returns. Now there's also issues about what expenses you can deduct in the property. You can report expenses even up to 7 years before you start renting the property. But also expenses, also you need to be aware of capital nature expenses and revenue nature expenses, because sometimes replacing the entire roof in the house is of capital nature, whilst if you are just repairing the washing machine or repairing a leak roof by not replacing the entire roof is considered a repair. So there is more checks that's going to be involved in that repair and maintenance, because that's where a lot of property landlords just lump figures into, and they will actually want to know if it's a capital nature, which you can use when you eventually sell the property, but you should not include it as a revenue expenses. So they are looking into that. You have a lot of revenue expenses that you can bring in, management fees, utilities, accountancy fees, etc. Multiple properties also is good, because the losses of one can be used to reduce the profit of the other. So overall, you are on a much lower profit value. So having multiple properties pool make a good sense of pool. Say for instance, I have a property, my wife have a property. If you pull it together, then you share the profits losses, it's better than everybody going with theirs, because one person can have employment, the other one can have employment, but then will be in higher tax because it's profitable, whilst that other partner is carrying forward the losses. There is capital gain exemption that is from 12,300. When you eventually dispose of the property, there is an exemption called capital gains tax exemption. It's dropped from 12,300. Now it's just 3,000 and from April. And the current rate of capital gains is 18% and 24%. Now, we briefly talk about transfer of property to limited company. A lot of people want to do that because of the issues that is coming up with the private ownership of this property. This is easier said than done, because there is benefits we see, which means you are now able to deduct all those interest payments, and the profit on it becomes just 19% flat rate, rather than profit becoming on top of your employment income. So if you have a good salary and you have a property rental income profit, your profit is really at a very high rate. So it really yes makes sense for it to be a limited company than run the property on your name. But to transfer it is like selling it to the company, and then you have to pay all the stamp duty, surcharges, remortgage again. The mortgage have to move to one that is mortgage in the company. There are legal fees involved, admin fees, and accountant fee. And then when you sell the property, in the end, it's subject to corporate being an inheritance aspect involved in it, uh, if it was a property in your name. But yes, there is cost and a lot of cumbersome thing to look at before you do that. All right, I think this is the last slide. We'll just talk about paying HMRC. They've gone digital, and the objective of HMRC now, they've changed uh, their what I would call their temperature, or what I would call their communication, has changed to encourage you to pay the tax that you owe them. And don't forget, this tax bill grows every day. They add interest and they add late payment penalties on them. um Now, how the personal tax is the one that you owe in your name. Company tax debt is one that the company owns in their name. The personal tax can get carried on to be recovered from your salary, but they won't do it without your notice. That is, if they feel they are not able to get it. It can be factored into your tax code. Eventually, if you do not pay it, you become a pensioner. It can be taken from your pension. And also, we've seen tax debt going onto your estate. Let's say you leave a property and you die. When your estate is being calculated, they have to go and check if you owe HMRC, and then they will take their money first from that property. So you can end up with that property going, most of the proceeds going of selling that property cannot be uh, beneficial to your loved ones that you've left behind. It will be going first to HMRC. So it's good to consider paying these taxes that we owe HMRC. We all owe them, but yes, sometimes we tend to hide from them. Now, if you cannot pay the tax bill in full, set up a payment plan, pay by installments. They have done these things now digitally where you don't even need to talk to them. You have to be proactive. Go online, set those payment plan. If your bill is not even overdue, you can make advance payment on towards your taxes by setting up a budget payment plan. Now, the amount that you can pay each month will be based on, they are now also socially conscious of not making sure you use all your resources to pay your tax bill and you are left in the street, because a lot of people for tax bill have gone mental, they've gone suicidal, they've gone out of place, so they are trying to encourage one to manage these things with so they are very socially conscious now of making things, so it's become easier now to pay the tax bill, but it doesn't go away. You can make payment plan, and before they are only limited to 12 months, but now they can open it up if they know your circumstances and your situation warrant it. But again, not paying it is not an option because it doesn't go away. A lot of companies cannot be strict enough simply because they have a tax debt. So the company stays afloat, and now they have penalties for companies house, penalties for not filing, and it goes on month by month, year by year. So one day they will get up and say, okay, let me correct this now. I cannot close the company. I want to, and then you will have penalties from companies house as well as this tax debt from HMRC. So it's better really to make a payment plan with HMRC because it's hard to win that battle, except to go and make a payment plan. Let's see, I've seen HMRC take people to court. I have a client of mine who was just ignoring the tax debt, traveling all over the world, and taking the money here, investing it back home somewhere, and then when the money finished, you want to come back, and he come back and face with a court. So they will start with the debt collection agency, and if that doesn't work, they will try to collect it from your wage, salary, or if you have pension. If you have none of that, even if you have a property, they will want to sell it to pay their tax debt. Even because the fact is, a simple debt of 20,000 can grow to 80,000 by the time you are planning to retire and settle, or planning to sell your house. It can, by that time it's 80,000, and then what will happen when you sell your house? It's the solicitor that has to do all the checks, and they will check and see that your debt is 80,000, and when you are much younger, it used to be 20,000. All right, so they are trying to even take money directly from bank account or savings. If you are in England, Wales or Northern Ireland, I've already said they can take you to court. They will not do that until they get to a point. For some, they do it pretty fast. I've seen people who were taken to court for owing far less than others who owe over longer time. So it's quite a random aspect. They can make you bankrupt or close down your company. Again, the company will not be closed. When they say close down your company, they will see if you have a business, and any aspect that is relating to you as a director, they will transfer that company debt to your name, and it goes into your record waiting for you to retire, and then they take it from their state pension. All right, okay, that's it. Finally, where are we at the end of the road? So yes, I know there is a lot that we have tried to cover. within an hour. We ended up a little bit over. But thank you all for joining. If you have more questions, I have my details on the screen. Definitely, let's talk about it, and we can see how we help ourselves grow. But yeah, we have to be here. We have to stay here, be here, stay here, and win it as well as win out of the UK. But it's very difficult to run from the system. All right then. Thank you
Thank
all.
you. Thank you so much, Alhassan. I have one question before we round up, and
Mhm.
if anybody else has any questions. So for the property management, is it possible to get an allowance as an individual managing your own property? So you're not paying the estate agents, they are not managing it. Can you get an allowance for management from
Well,
HMRC?
for us as accountants, we do take that into consideration when we do the property rentals. If there is a period of yes, enough profits, we do put an allowance of a percentage of the income. We put it anyway as management allowance, whether or not it's done by yourself. Yeah, we do that. But, like as other costs, we can take that to mean the time you spent at home driving to and fro, making sure here and there. So we put an allowance in it. But if you ask HMRC, they will tell you no, it has to be externally sourced. But we know there are certain costs. Some people do capture them, but even if you do not capture them, yes, we make allowance for that. But
Okay.
it's all based on the income. To be honest, if the income is already low, the allowance will presumably be low. And if you have one property, the allowance may be lower than someone who has five properties.